Hey guys, it's James, and today I wanted to compare two S&P 500 buy right or covered call ETFs. I believe these words are used interchangeably, covered call and buy right, meaning they buy the stocks or underlying assets from the S&P 500 and write or sell call options on each of the funds in the S&P 500. I would like to see how these funds compare historically and then what they would compare in the future and how your portfolios would look like with an initial deposit of $350,000, and then I'll go ahead and drop this down to about $10,000 and see what we get. But first, I'd like to go over to the fund website pages and check out some numbers. Go over to Seeking Alpha to be able to gather information for their CAGR numbers, and then go over to Portfolio Visualizer and check out the historical comparison between these two funds. Over on Global X's website for XYLD, it is their S&P 500 covered call ETF. Coming down to some of the key information, the inception date was June of 2013. For a total expense ratio of 0.60, they will buy and sell call options for you on the S&P 500, and then any of the premiums they receive, they will give back to you in a dividend. And their 12-month trailing dividend yield or distribution yield is 9.94%, which we will use this number. So their ETF summary and objective: the Global X S&P 500 covered call ETF XYLD follows a covered call or buy right strategy in which the fund buys the stocks in the S&P 500 index and writes or sells corresponding call options on the same index. The Global X S&P 500 covered call ETF seeks to provide investment results that correspond generally to the price and yield performance before fees and expenses of the CBOE S&P 500 buy right index, and we'll see this same exact index over on PBP's website page. PBP is owned by Invesco, and Invesco also owns the popular QQQ, but this fund here is Invesco's S&P 500 buy right ETF. As we saw over on Global X's website, the fund is based on the CBOE S&P 500 buy right index. However, Invesco, the fund generally will invest at least 90% of its total assets, where I believe Global X invests 100% of their assets and writes and sells call options on those. What I'd like to highlight here is that PBP's inception date was December 2007, so a little bit older than XYLD. Over on Seeking Alpha's page, what we're trying to do here is find a CAGR number over the entire history of the fund. If you take a look at XYLD, you will see that the fund started around $40, so we'll use the market price was around 40. And today they are sitting at $49.24. For the sake of this video, we will take a CAGR number from the fund inception date, around $40, around June of 2013. Take it all the way to today. Same thing for PBP. This is their market price, historical market price data, starting at around $25. You can see it took a huge dip due to the crisis in 2008, but then flatlined for a good 10 years, took a dip again in March of 2020, but then has come back up to about $23. So we will take the starting figure of about 25 and come to about 23. Let's go ahead and do that right now. And putting those numbers in for XYLD, this is another tab on my calculator, and this calculator is available to you. If you'd like to have access to it, you can head over to my Patreon. It is my fund versus fund investing calculator, as the name states right here. This is my CAGR calculator portion of this investing calculator. The starting value is $40 with a time period of 8.5, and it will calculate a cumulative annual growth rate of 2.48. Over for PBP, starting value of $25, time period of 14.25, with the ending value already put in here at 2307. You only change the yellow for a total cumulative annual growth rate of a negative, almost negative 0.6. So we'll go ahead and use these two numbers to be able to determine the future value of our funds over the next 10 years. Let's go over first to Portfolio Visualizer and see how these two funds performed historically. Over on Portfolio Visualizer, we're taking it on a month-to-month basis from the fund inception date of the newest fund, which would be XYLD, with the inception date being June 2013, an initial deposit of $10,000. We'll take a peek at reinvesting dividends. We'll click that to yes and then no and then see what we get. For XYLD versus PBP, our two buy right S&P 500 ETFs, and we see that XYLD has outperformed PBP. Take a look at the CAGR numbers. Since June of 2013, XYLD is sitting at an 8.2% with dividends reinvested, and PBP is sitting at a 6.29% with dividends reinvested. Now, if you compare this to a regular S&P 500 fund like VOO is probably closer to a 14 to 15% CAGR over the entire history of that fund, about 14% on average per year. Coming back up and not reinvesting dividends, let's see what we would have gotten. Let's say you wanted to invest $10,000 and you wanted to let it ride and you wanted to pull out the income. You wanted to pull out these incomes down here. With the first year, your $10,000 would have gotten you $271 from XYLD and $500 from PBP. And the most recent full year, you would have gotten $1,133 from XYLD and $713 from PBP if you put your $10,000 in these funds in 2013 and just let them ride and grow with the market. In the end, Global X's XYLD would have outperformed. This is what your funds would look like after about 8.5 years. The overall CAGR number without dividends reinvested for XYLD is 2%, and the all CAGR number starting June 2013 for PBP is 1.19%. Coming back over to our calculator, if you recall, we calculated these CAGR numbers for XYLD and PBP. So let's go ahead and transfer them over to our main calculator. So I went ahead and chose the option to reinvest the dividends. So you can see that these portfolio values will appreciate over the course of 10 years. With dividends reinvested, your negative CAGR growth rate will not cause your portfolio value to go down since you are reinvesting dividends. So we take a peek here. After 10 years with reinvesting dividends, you're $350,000 with no monthly contribution if XYLD continues to grow as it had in the past years, with about a 2.48% total cumulative annual growth rate. Your $350,000 could be sitting around $1 million, and PBP with the negative 0.56% with a 6.25% dividend yield, you would be sitting around $579,000. Again, this is not the best fund to invest in if you are looking for maximum growth and no dividends. If you are going to reinvest dividends, you might as well invest in a broad market fund like VTI or VOO. But taking a look at the income funds, or taking a look at what type of dividends you would be reinvesting into your portfolio, this is what you would be getting over the course of 10 years. Let's take a look and determine if you are not reinvesting dividends. Let's say you got to a point where your taxable income, your taxable account got to about $350,000 and you just wanted to let it ride with XYLD or PBP. Let's say you hit that number, you were around 35, 45, 55, and you wanted to retire early and you thought you could do it. This is what you would be looking at with XYLD, your $350,000. 10 years later, let's say you wanted to retire at 30 and you had $350,000. At 40, your $350,000 without dividends reinvested will grow to about $421,000, assuming XYLD continues their 2.48% annual growth rate with these numbers in the dividends, with a continued dividend of 9.94%. So you tell yourself, can you live off of $35,000 a year on your $356,000 investment after year one? And then it continues to slightly increase over the course of 10 years for XYLD. For PBP, you do have a depreciating asset over the course of 10 years, as we were able to calculate the CAGR number and it came out to be negative. This is what you would have in PBP, and this is the type of income you would receive with PBP over the course of 10 years. So with that, let me know what you think of XYLD and PBP. What would you rather invest in? And would you invest in these funds at all? Or are you investing in a VOO or a VTI type of growth fund? Let me know in the comments. Let me know if you want to see another comparison between two different funds with this calculator. And with that, thanks for watching.